what are the main themes and trends that you're currently watching when it comes to the silver space that you think more investors should be paying attention to?
The drawdown in supply, really, from the LBMA, who tells us it's the second lowest amount of silver that the the London Bullion Market Association, don't want to say LME, the LBMA, because they're different. The London Metals Exchange, the Chinese own, and those are the base metals. The LBMA would be the silver and gold and whatnot. And they tell us it's the second lowest amount of silver they've had in their inventory since they started keeping records. It's a 140-year-old institution. We've seen massive drawdowns out of the COMEX, off the ETFs, and even out of the Shanghai Metals Exchange. It's very interesting that when you look at the price, currently there are 8 banks, that hold the largest concentrated short position of any commodity ever traded in the history of the COMEX market. Why? Why would 8 banks be stepping on the price of silver that much? Or the LBMA, who tells us they trade 290 million ounces of silver per day, but say that those numbers are 10% understated, 10 times understated from what is actually traded, just the settlement numbers. But the trading is 10 times greater. That would say 2.9 billion ounces of silver is traded in London per day. That's 3.5 times annual global mine supply. Now, the LBMA says they're very low on silver. They have 800 million ounces, period, of which over 500 million belong to the ETFs, leaving 300 million ounces there, yet they're trading close to 3 billion ounces per day. So between the 8 banks on COMEX, which control the largest concentrated short position in any commodity ever traded, or the LBMA, which is trading up to 3.5 times annual global mine supply every day, should tell you that the real price for silver is, well, heck, no one knows what it is. And when you see central banks like India, who in the last 2.5, 3 years has bought over 700 million ounces of silver, and already here in 2024 bought more silver than they did all of 2023 in the first 4 months of the year, and now bought a whole bunch of silver recently, billions of dollars worth, from the United Arab Emirates, because they have some deal in trade with them where they don't have to pay as big of an import duty. Silver is something that is a strategic asset, not an industrial, as all of us want or are told should be.
Is this a time to take profits in your view, or do you think this is a bull market that still has a ways to go from here?
I think this is the very beginning. And, you know, I'm sure some people say, well, that's rich coming from a guy that owns a precious metals company, but that has nothing to do with it. In fact, I think what we are seeing, Jesse, is a growing trend. And we will talk about this, I hope, today as we talk about the BRICS and some new developments that have come out of Novigrad, a meeting that was had a few weeks ago coinciding with the G7 meeting, whereby I believe gold has been remonetized, as has oil, that it is becoming far more valuable than the currency that purchases it. It is becoming, I believe, the cornerstone of a new system, and we will hopefully get into that when we talk about the BRICS. But the amount of purchasing by the central banks is off the charts. These are the most well-funded and well-informed traders on the planet. There's this nonsense coming out of the Western media that China stopped buying gold for 2 months. No, they didn't. That's a flat-out lie. They say that, and then the price of gold fell. But China they're trying to tell us that they have 2,600 metric tons of gold. Not the case. But I want to simply say that why would any nation, especially if they plan on revaluing gold, and I think they are, why would anyone want to say how much gold they have? The United States supposedly has 8,300 metric tons of gold at Fort Knox, which has not been audited since 1953. And when Ron Paul said, let's audit the gold since it belongs to the American people, let's audit it. Twice he asked for that, both times, turned down, veto, no. Why? It's our gold. Why don't we tell the world how much gold we have? So in any case, The Western media says, yeah, the Chinese stopped buying gold for 2 months. That's not the case. They have proxy banks, which I'm going to get into in a minute. One in particular called Shanghai Futures. But they have proxy banks that buy these commercial banks on behalf of the PBOC, the People's Bank of China. And when they buy from the refineries in South Africa or Switzerland, they're not telling the IMF. When they buy gold, and the IMF is who reports everyone's gold holdings. When they buy gold that is not 995 pure, it has to be that pure. They're not telling the IMF. They produce between 400 and 500 metric tons a year and have been for 25 years. But we're supposed to believe they only have 2,600 metric tons. They're not telling us that. And if you look at the amount of gold that all the European countries have as a percentage of GDP, the amount of gold that they've bought, it's almost exactly the same over the last few years. They've all leveled out to almost exactly the same thing. There is a drive by all of these countries to produce or to accumulate.
So you think that's driving towards a one-to-one currency valuation worldwide? Is that what you're saying? You think?
Well, I just think that they all need to have enough of it. Maybe they know what the number they're going to revalue it at is. I don't know. But there is no question but that the central banks of the world are accumulating gold at a fever pitch. And they've been able to do it by allowing the Western markets to suppress the shit out of the price of gold to maintain the illusion of dollar and bond supremacy. Look at what it says here, just up to right here. The present consumption of silver for war purposes is at the rate of about 100 million ounces a year and is growing rapidly. According to the War Production Board, it is only a matter of months before war demands will have increased sufficiently to require at least 200 million ounces a year. That's 1942. And then I say this, do you notice something missing? Well, this is the supply-demand numbers from the Silver Institute. Well, let's see. Industrial, 9%. Electrical and electronics, 9%. Photovoltaics, that's solar panels, 20%. Brazing alloys and solders, 3%. Other industrial, 9%. Photography, -3%. Jewelry, 4%. Well, where the hell is military?
Right.
And we are way, way more advanced technologically where you would need silver in all of these high-tech aerospace and weapons, to John's point. So Keith is right. And it's actually a whole hell of a lot more.
Yeah,
and this is why you have 8 banks short the way they are. These 8 Western banks were told, step on the price of silver. We need it to create weapons.
But then look at Cloward-Piven theory, husband and wife professors who taught a class at Columbia University where he went. This is a guy who has a degree in music and a master's degree in social work. He's the lead economic advisor of the U.S. government. Modern monetary theorist who believes in inclusionary economics. Advocates for loss of the reserve status. It's a privilege we cannot afford. Weaponize the dollar across the globe. Sign an executive order to go green and let this country fall apart. That's what he wants. And Lael Brainerd, as we've talked about, the number 2 modern monetary theorist who helped produce the CBDC with MIT when she was at the Boston Fed and just ran point for Fed Now, which is Venmo and Zelle on steroids backed by the Fed. This is what she wants. So if everyone dumps dollars, which starts out slow and then goes faster and faster, the byproduct is inflation that goes to the moon. The only thing that can happen then is interest rates to compensate, not controlled by Powell and the Fed, but by the market. You can't have 25% inflation and 3 or 4 or 5% interest rates. Your currency dies. Interest rates spike, everything collapses. The banks that are loaded, undercapitalized and over-leveraged, the insurance companies are loaded in treasuries. The dollar gets dumped, that's dead, as do stocks, bonds, and real estate. It's the Great Reset.
The problem is that as this accelerates and there is no demand for our treasuries, who finances our $1 trillion a month debt binge? Who finances, even if we were balanced budget right now, the 200 trillion in funded and unfunded liabilities? And so inflation has to happen. It's either the Fed, which is the most likely, or they funnel money under the table to countries like Ireland and the United Kingdom and say, here, buy our treasuries, make it look real. Because who the hell wants to hold 10-year treasuries in a country that has chosen inflation over austerity, creating $1 trillion in debt every 100 days, weaponizing the treasury market? And why would anyone hold treasuries of any duration when we've proven that can be deadly? And we let interest rates rise 500 basis points in a year after keeping them zero range bound for a decade, 15 years, and screwed everyone who held treasuries. Well, my feeling is that as the world dumps dollars and treasuries, rates go higher than anyone can think possible. That's the Great Reset. And so I don't know how fast that happens, but when treasury rates spike to the moon because no one is buying the duration treasuries, except maybe the Fed, which means monetization of the debt, or Weimar Republic, all roads lead to the same place. And if rates spike in that environment, then everything opposite it collapse: stocks, bonds, real estate, the banks, the insurance companies. That's the Great Reset. And that's the path that I've gone down for so long, thinking, well, this is how you blame a victim, or you become the victim and blame a villain for doing this to us, instead of looking closely at the fact that we've created so much debt where we have so mismanagement, the privilege of being the world reserve mismanaged. It's obscene.
Says on the unit that it'll be 40% gold instead of, as Sergei Glaziev originally said in his thesis, that it would be a basket of commodities.
Right.
Now, I think they decided that multiple commodities becomes too challenging to balance, and the shipping costs and all of the problems associated with commodities. Gold being the only other tier one asset in the world that all of the central banks have been massively buying,
Right.
makes more sense.
Right.
60% a basket of local currencies. Now, before I say the kicker, which is really important, let's keep in mind that in the past 2.5 years, all of those banks that I mentioned, about 30 others have repatriated all of their gold, including recently Saudi Arabia, Egypt, and about 7 countries from Africa brought all their gold back from the New York Fed. The Bank of India bought 1.5 times the amount of gold they bought all of last year in the first 4 months of this year, and brought it home along with 100 metric tons they've been holding at the Bank of England since 1991. Now, the reason these countries would leave their gold at the Bank of England or the New York Fed was, of course, safe jurisdiction, rule of law, that old thing, but access to the LBMA and access to the COMEX. COMEX would be the Bank of New York, LBMA would be the Bank of England. Everything's safe, everything's copacetic. Not anymore. With the weaponizing of the dollar and the treasury market, give us back our stuff. All right, so here's the kicker, right? We see all of these countries repatriating their gold. We see the central banks buying more than any time ever in central bank history, ever, in over 100 years, continuously. Biggest first quarter purchasing by central banks ever, 2024 quarter one, only surpassing 2023 quarter one as the previously biggest quarter ever by central banks, first quarter. You can see the trend: buy, bring it home, buy, bring it home. No counterparty risk. So in the white paper, it says that 40% gold and the 60% local currency will be created by all of the countries who adhere to the unit. The gold will be held within the borders of each country's sovereignty. So they don't have to send it to Shanghai and leave it there. They don't have to send it to Moscow. Each country
In their own borders.
in their own borders will hold their own gold. They will be put into an escrow account along with the currency, the 60% currency basket held in an escrow account, but really, really, really viciously audited, independently audited by independent auditors, and very steep violations for not adhering to the protocol. Mm-hmm. So what it allows these countries to do is not send their gold off to someone else. And do you see the reason maybe why they're repatriating all their gold? Because this new unit, which will be traded on Project Embridge, which is backed by the BIS, who classify gold as tier one. This is the exact same thing that they did in 2017. Tell all the banks to buy the gold, repatriate it, and then, hey, surprise, it's tier one. Now they're telling everyone, buy more, bring it home, because surprise, you're all going to trade this new settlement currency, which will be 40% gold backed, 60% gold backed, or 60% currency backed to the BRICS units, but you can hold it in your own jurisdiction.
The best and the brightest people in this country in the Secret Service, how do they get to them? That's the part I don't understand. How do you get to the Secret Service and all of these, the FBI? How do you get to these people and destroy the culture from within? I don't understand it. I don't know what they offered these people, but to think this is how the whole system works. It's right out in front of us too, and that's the crazy thing. They don't even try to hide it anymore. It's right out in front of you. And the head of Secret Service says, "Well, the roof was too slanted." I mean, come on, really? Are we supposed to take that?
Well, they
but
think we're stupid, and I
so
think
that's
people
why I
are
agree
just
with you,
fed up with
Sarah.
it. Yeah.
This is too stupid, and I don't know. And you've opened my eyes to maybe a little deep dive, if you will. But let's just say we agree with the final outcome, and we agree that it is too stupid to not be planned. The question is it who's behind it?
That's right.
And that's a question I haven't even stopped to think for a moment, but I will now.